Everybody, this is Paul, the Death Scouter, making another video. This is going to go into my financial uh, collection of videos that I have out on my Death Scouter, all one word, YouTube channel. And today I'm doing an analysis that only covers the year 2021. Okay, so your mileage may vary, but for over the year 2021, what if you had $12,000 burning a hole in your pocket and you were deciding whether or not you should dollar cost average your way into the market, or if you should just go all in on day number one and buy in lump sum. All right, so for those of you who don't understand what dollar cost averaging is, it means that you are going to invest a regular amount of money on a regular time interval, regardless of what the market is doing. Now, theoretically, realizing that the stock market goes up and down, up and down, up and down every day in value, the days that it's higher, you will buy less with your investment, and the days that it is lower, you will buy more with your investment. So it is a mechanism where you are automatically supposed to, at least in theory, be buying more shares when the prices are low, less shares when the prices are high, for an average lower cost per share, and somehow you are supposed to come out ahead. Did you or did you not in 2021? Well, that's what we're going to investigate in this video. So let me show you the math of what I've got here. So $12,000, which is a nice round number considering there's 12 months in a year. Dollar cost averaging in at $1,000 every month, regardless of what the market is doing. What I did is I went out and I took a look at stock symbol VOO. VOO is an ETF, an exchange traded fund that invests in the Standard & Poor's 500 index, a very well-performing, well-respected index of quote unquote the stock market. So the S&P 500 price tied to the VOO stock symbol on the closing price of the first day of trading each month throughout 2021. That's where these numbers come from. So the first day of trading in January 4, 2021, the closing price was $339.03 per share. You put in your $1,000, which netted you 2.95 shares of stock symbol VOO. Okay, and we're going to go ahead and watch the average price of the shares over here, which may or may not be of value to you. And then what we're going to do is based on this closing price, tell you what your ending value was. Now, obviously, the first month, your ending value is what you bought in at. And then just for the fun of it, just to keep it relevant, I'm making this video today. It is February 6th, 2022. Sunday, the market is closed, so this price is solid for the rest of the day. But this is today's stock price. So had you bought 2.95 shares on the 4th of January, your $1,000 investment would be worth $1,216.77 today. Now, over here in the green columns, this is the non-dollar cost averaging. This is the guy that went all in January 4th with all $12,000. And you see that he ended up with 35.3951 shares. His lump sum value obviously was $12,000, but now over a year later, that $12,000 is worth $14,601.19, and that's going to stay the same throughout this worksheet because the number of shares that the lump sum investor bought will not change, and today's price is today's price. So just keep this up here, and I'm not going to do this month for month, or this would be a very long video. I just want to show you how the math is working on the video. So the second day you buy in, the first trading day of the month happened to be February 1st. Again, notice that the closing price is different, but your investment amount is the same. And you'll notice that because the stock price went up a month later, you ended up buying in at fewer shares. Your $1,000 bought you fewer shares in February than it bought you in January. And then we're just going to take that last year's shares plus this year's shares and tally them together. So this column is simply going to be a running tally of how many shares you're buying as the year goes along. And again, the monthly value of all the shares that you own times that day's closing value equals the value of your account for that month. And again, now if you had 5.84 shares based upon today's price, February 6th, 2022, this is how much you'd have. And you see that these values for the lump sum are not going to change. So you understand that that's really what's happening all the way down this worksheet. Let's go ahead and get this graphic out of the way. And you can pause the screen and look at this if you want. I don't want to make this a very lengthy video. My goal was going to be to get this under 10 minutes. But I want you to see what's happening month after month after month and the number of shares that you're getting and what your values are. Now, what really matters is where did you end up, right? Should I have dollar cost averaged my way into the market, or should I have gone all in day number one? And so I graph this out. A picture's worth 1,000 words. In green is the person who went all in, and you see that they're at $12,000 to start, and they stayed ahead of the curve the entire year. The dollar cost averaging person was always adding at least $1,000 into their account, but you're going to see that they ultimately ended up lower than the person who went all in on the first. Now, dollar cost averaging is a good theoretical exercise. It made sense, right? You bought more when prices were low, you bought less when the prices were high. You'd assume that you came out ahead, but the problem is you didn't. And the question would be why. Now, I can go back and run this exercise for previous years, and that might be fun to do. But let's talk about what actually happened in 2021 and what your expectations are going forward. Well, the stock market goes up and down every single day. But when you back away from the daily and you look at the weekly and you look at the monthly and you look at the yearly, you see that the stock market trends upwards. So it goes up and down, up and down, up and down on an upward trend, which means theoretically, buying in February, March, April, May, June, you're always buying in at a higher price than if you would have just bought in on January 1. Obviously, past performance could be different, but this is what happened in 2021. So, in theory, you're buying into the stock market because you expect the prices to go higher, which means today's the lowest day to buy in. And when there are analyses done that says what happens if you bought in on the best day of the year, right? You have a magic crystal ball, and the crystal ball says today is the lowest price the stock market's going to be this year, and you go all in. And versus the guy that's, bad luck schleprock, he bought in on the worst possible day of the year at the peak of the annual price. What they have found in these analyses is that when you back away and you look at this over time, the differences between the best day and the workday average out to almost no difference at all. Why? Because the market goes upwards on a trend. So the daily fluctuations or even the monthly fluctuations usually average out to nothing. So in general, dollar cost averaging is a great academic discussion. And for most of us who are contributing to the market, either on our own through our individual accounts or through our personal 401k accounts, we're dollar cost averaging in no matter what because we're just buying every paycheck. But a person who has a lump sum and is wondering how to get into the market might want to reconsider dollar cost averaging because, as I said, the expectation is the future is higher prices. So why not buy in today when the prices are theoretically low as opposed to tomorrow when the prices are theoretically high? None of us have a crystal ball. None of us know what the market's going to do from day in and day out. But the theory is the theory. I hope you enjoyed this video. I did keep it under 10 minutes. We're at 9 minutes and 7 seconds. I'll leave this up here. You go ahead and freeze the screen if you like. Swing this back over. I am the Death Scouter. I have a YouTube channel. I would love for you to like and subscribe. I have everything out there from car repairs to a ton of financial education and these kind of fun financial exercises so that you can actually see the numbers and start to separate the fact from the fiction. Thanks a lot for watching. I'm Paul. Have a great day and happy investing.